Good morning, everybody. Happy Monday, December 15th. Final full week of trading. Let's see what we get. Friday was a little interesting. Market moved quite a bit further than expected move. We had a plus minus 31. Market ended up moving about 63 points on the day. I think we had like an 80-point drop. It came right back down to 6,800, which is still support the last couple of weeks. We go back to the NVIDIA sell-off candle. It's still 67.70, still support. Futures are up this morning about 0.55. So more than likely recovering into last week's candle. We open up a couple more workspaces here. See if we're back into some positive gamma. VIX has retreated. We had another kind of intraday spike on VIX last week. We're back down to low 16s. Okay. All right. I mean, again, for a Monday, it's like these gamma levels are pretty wide. We're going to be opening up about 0.5% higher. So that puts us up around, look at this ridiculousness, about the halfway point of the entire sell-off, if not slightly higher. And if we're in that transition between above this, yellow or sorry, red dot is positive gamma, transitioning up to 6880, 6890, possibly 6900. Again, is it going to be a noisy week? Where we fail above 6,900. We don't break below 6,880. We do have some news this week that should be coming out. Let's look at high impact. Get the chat up and running for everybody. All right. Terry, good morning. Greg, good morning. John, good morning. James, Ernesto, Mark, Keith, good morning, everybody. Here we go. So when you look at it from a bigger time frame, not much happened the last couple of weeks, right? Even Friday's candle, yes, it was a greater than expected move. The VIX had a big spike up in the morning, but context wise, technically, didn't really do anything. It was down. It was outside of our expected move. I did take a loss on daily profit play. Had to wash that with some of those butterfly traps that I had or iron fly traps that I had. I landed one at the close that washed that. I still lost a few $100 on Friday. But it is what it is. I mean, it was a decent trade, kind of wild day. We had double the move as far as open to close. Expected 31 points and ended up closing, 63 points lower. And it moved 80 points. So had a chance. If I were to look back and say what could I have done differently or better, it would have been mitigating some of the risk up here in the 50s. So by 1 o'clock Eastern time, even taking a manageable loss would have been better. But I mean, obviously didn't know. Having the market go high, low, get back to the halfway point. I'm like, well, if we hang out here, get back within the expected move, I thought we could close back above 54. I mean, it's funny how that was literally 54. That was inside of the expected move. So we broke it, came back to it, and then failed. So, that happens once in a blue moon. I'd say, that's why we have about a 90% win rate, is that 10% is something like that, where as long as we manage risk, we hate taking losses, but it happens and we move on. So, but it was nice to offset a little bit of that. Did any of the trades fill besides the daily problem? I mean, I had a bunch of trades running on Friday. So I needed, trying to think of the image that I showed on Friday. Oops, don't, oh, no, 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 don't do that. Let's go this guy. So Friday, that was our heat map, market rotation. This, I drew this up on Friday. Let me see if I can delete this. Is there an eraser tool? Oops, that's everything. I don't want that. All right. So this is what my kind of trade day looked like on Friday. I had lots and lots of traps. The market closed at 68.27. 68.27 was right there. So that profit trap was hit. That profit trap was worth about 420 bucks. So I did hit this one. The best profit trap for me would have been around 68.60 or 6800. Those had the biggest jumps. This would have been over $1,000. This one here was over $1,000. Missed it, obviously. This one was about $1,700. Missed it. So, like I said, I offset the daily profit loss. Still had some small losses here. Like this one was, a lot of these were less than $100 risk. So it stacked up to be like a $300 loss last week on Friday versus taking the $400 loss on daily profit play. But that does mark 3 days in a row that market makers have not kept price within the expected range. So, again, a part of me is a little bit, concerned that, okay, does this mean that we're trading like loose for the end of the year? Does this mean that there's less volume and therefore some of the moves won't be contained as well? I mean, I look at it today, like today was like Monday. Monday, it's like we have a gamma at 68. We're opening 0.5% higher. So if we open 0.5% higher here, and then we also go to 6,900, I mean, that move is another 30 some points. That's probably the expected move. I would imagine at the VIX at 16. You open the broker platform and find out. If you have your plus or minus move, whether it's think or swim, tasty, go ahead and throw it in the chat. I'll open up my broker platform. 36. Okay. Okay, I'll open up it right now. $36.07 on Tasty. 30. Okay. All right. Pre-market gamma above 68.40, 68.45 is positive gamma. So here's 68.45. This is pre-market SPX. Biggest level is 68. So unless we are going to, open and fail, this is going to change. This is pre-market, so opening higher with futures flows. By the time we get into live market this morning, I would imagine we're probably going to have some positive gamma filling up here towards that 6,900 handle. That's what we're showing here from 68.80, 90, and 6,900. All right, there we go. Get some nice six-figure winners this year. Love it. Okay, so that plus minus should have, today's the 15th. I got a futures position in oil that expires tomorrow for 220 bucks. Go SPX. That trade for oil futures is a trade in Project Options Edge. I'd mentioned that I'm just going to let it expire. It expires tomorrow. So we should be up 220 bucks on that trade per contract. All right. Today's plus minus 36.07. That's pre-market. So we'll have a look at that this morning. What else is moving and shaking? So S&P futures 0.55, NASDAQ futures 0.70, Dow futures 0.5, Russell futures up 0.82, VIX down to low 16s, dollar index still down, natural gas back down to pretty much reset, gold up 0.7, silver up 3. What? Look at this. All right. Keep an eye on this old gold trade. I mean, if it goes up, that's fine. If it breaks that trend line, we're coming back to that 200-day moving average. I keep saying this, like we're so far away from the 200-day moving average. If we're lucky, we go up a little bit higher, but part of me is just ready for gold to consolidate. So, I mean, it wouldn't be fun to see gold, stay here, like hit the highs and then fall all the way back down to the lows. I don't know if that comes with a trade-off where the dollar gets stronger or we just have the markets ready to go much higher, like equities markets go higher with some thought that, I mean, this was falling when the dollar was rallying. So that's probably the best correlation that I would expect is dollar gets stronger, gold weakens. But dollar's been showing better signs of weakness. And going into these last couple weeks of holiday trading, it's like, are we going to see the dollar bounce hard? I doubt it. I doubt it. So anyway, probably just positive drift into the end of the year. But there's just near-term resistance. Silver back up near all-time highs again. Crazy. Expect volatility, but what a great run. Year to date, if I go SLV, 100%, 109% year to date on SLV and pre-market up because we're testing highs again. So crazy stuff. Bitcoin, we'll see. I'd mentioned, I'd mentioned this kind of structure right there. So if that breaks back down, if it breaks back down, I could see us testing the lows, maybe even hitting fresh lows, but that's a divergent low that hopefully ignites a, bullish pattern to kind of bottom this thing out. So we shall see. Got chart alarm set back to lows, chart alarm set back up here towards 100K. Let's kind of keep an eye on things. All right. So that is 3607 on Tasty. We go Thinkorswim Web. I'm reading 30.1. Oscar, no. I mean, you never have price predicted like that. Basically, it means this: from open to close, do they keep it within the expected range? Price can do whatever it needs to do. There's no guarantee price goes up first, down first, price goes sideways first. It's totally, we're at the mercy of the flows. But for the end of the day, as long as it's like a plus minus within the expected range, well, market makers did their day or did their job. All right. So option chain. Yeah, that's interesting. Plus 30, Thinkorswim. So, I mean, again, that should be pretty quiet. I don't know. I don't know why it's different. I mean, the reality is this is a plus minus 30. We got a 36 on Tasty. I just say that's a good number to keep in the back of your head because what really matters is when we go live at 9:30. So this will change, in real time. This will change as soon as the market starts opening. There's going to be those quick adjustments. We are going to deal with a pretty sizable gap. So directionally, going 0.57 plus the VIX at 16. One thing I was a little disappointed with last week on Friday was this run up in the VIX. We had calculated out about a 1.11% move, and the market ended up dropping 1.3. That rarely happens. So, I mean, part of me is happy that I didn't call the bottom, because if we did call the bottom, we would have been sweating that out. So if we did 1.1, if we called the bottom at 1.1, it did go lower, which obviously wouldn't have been fun. The whole point of having those defense trades is feeling confident like that is the low. So we did not close. We did not close below that level. So anyway, but it tested it. It tested it again and then bounced up at the very, very close on Friday. But that's unusual to see the market, rip. Well, at least to the downside, it fell, 1.3%. Okay. And that's not like top to bottom of the day. That's the open. So we opened, dropped 1.29, and then came back up. And the VIX did not get any higher than 1786. So that was the one thing I didn't love last week on Friday. Like, the VIX didn't even get it right. So that's a 1.12% moving in with 1.29. So today, 1608, rough calculation is going to be about a 1% move, plus or minus. We get the gap, we take that plus the gap. So 1608, 1609. VIX was up here in the morning around 1647. That shouldn't be a huge difference. 1647 is 1.03 versus 1609 is 1.00, 1.01. So should be the same strike if we're going to gap and open higher. So let me get a screenshot of this. Okay, so I'm going to put this in the ATR tracker tab for the 13th, 12th. Oh, well, I guess I put it in there already. All right, so that tab's updated for ATR tracker. Screenshots in. Now I'm going to recenter this at 6827. 6827. Take our 1.00. We're going to gap higher. So about a 0.5% gap. So about 68.61 open price. Take that plus the 0.5. Oh boy. Or no, plus a 1. So 69.30 to 69.31, I would say, is a pretty safe top. 69.30. That's again if the VIX stays where it is, like low 16s. So that's a 16.10 VIX. And then we'll take the bottom based on previous day's close, go 1.03, 67.56. Okay, there should be pretty safe highs and lows on the day. ATRs are pretty tight. We're probably gapping higher to be above the 50% anyway. Yep. So we're gonna be gapping above into this 50% ATR. Any positive movement, there is some pretty heavy resistance around 6,900. The market got all excited about that 6,900 close because that was an all-time high, and yet it sold off over 1% on Friday. So right now, 6,900 resistance, 6,800 support. If we can get through this week without breaking below 6,800 and closing below it, getting back to 6,900 and change, breaking through 6,900, I think we get a holiday rally. So possibly, fresh highs above 6,920, maybe even coming after that 7,000 handle. All right, opening bell in 3 minutes. Let's see what we get. Any questions for this morning? So, like I said, final full week of trading this week. No reason to take crazy risk or anything. It's like, let's just stick to the plan, stick to the process. If today is accurate, even with the plus or minus 30, I I hope we can get filled. This is the hard part is the way I've been trading the 10 delta, 11 delta on the daily profit play, if we have a really quiet day, we haven't really had a fill. So if we're plus minus 30, we're gapping higher, plus we're pushing. I just want to make sure that my call side today is above 69. So if we open up zero point 0.5 higher and we can still drift to 6,900, I don't want my call side to be in the way. Okay. So this is what I don't love is we've got this pretty manageable plus or minus expected move, but we have these huge ranges. Like that's 100-point range for a plus or minus 30 points, for plus or minus 36 points. So if anything, this is the type of day that market makers will probably do their job because that's a huge gamma separator on a move that's going to be much quieter. And since we've seen 3 days in a row, like literally FOMC did not close inside the expected range, Thursday last week and Friday last week did not close inside the expected range. So this, if anything, this is kind of that textbook day where market makers are probably like, okay, expected has to be greater than the actual. Why? So if any of them rolled risk or took on some extra heat through last week, then they get it back. And they start, kind of keeping this range in check for now. Microsoft Butterfly. Yeah. Yeah. Thank you for reminding me because I didn't remember. Microsoft Butterfly. So I have a trade running right now. I kind of like this where if we can have a profit trap on Microsoft in here, a little bit of risk to the downside, and then profit to the upside. So it'd be like a broken wing butterfly. You get a profit trap there, and then take on some risk if price breaks fresh lows around like 460. So yeah, we can look at that today. I want to make sure it's built out cost effectively. Like I'm not going to risk a ton of money on that trade. So let's see. I'll look at that one in just a minute. All right. Back to SPX. Market is open. We gapped up to about 68.60 right at that 50% ATR. EWJ crossing some highs. I think that's Nikkei. EWJ. Yep, gapping higher in the Nikkei. Get some pushes going non-US. Let's see, going higher. Brazil, Latin America. How's China doing today? Down. All right. SPX. So there's our price move. Take a look at SPX this morning, 15th of December. So, I mean, the plus or minus is now down to 25. So overall, this looks like it could be a pretty quiet day. Biggest gamma level I see right now, positive gamma, right around 68. So 68.45 or so. Then closing the gap. And 68.90 to 6,900. Like I'd say realistic levels on the day is we're going to stay greater than 68.40 or 45. And if there's any direction or any follow through, trying to get up towards 6,900 today. So haven't moved much. Let me look at my deltas here. These deltas need to shift. These are still too high. There we go. All right. So I can do a 6,900. That's an 8 delta. Oh boy. Let's see. I would do the 69, 69.05 and the 68, 67, 95. Right now, that's only showing 60 cents. I mean, this trade, I probably put it in and it doesn't fill. I just want to be safe, right? Like lower deltas, you want to go a little higher deltas than 68.95. Maybe you skew this a little bit where you have a slightly higher put delta since we are in positive gamma. Maybe going like a 15 delta on the put side. So 68.15, 68.10, 68.95, 60. It's like that. Even that is only trading for like 90 cents. And that's a 12 delta call with a 13 delta put. You go higher put side, now you can get over $1. So I'm going to go, let's see. I'm going to get a little fancier today just for fun. I'm going to go broken wing at 69 for $1, not filled, and a broken wing at 68. Okay. I'll post this for everybody if interested. I'm going to go $1 on broken wing butterflies. Because with my standard daily profit only showing like 55 or 60 cents, I don't think we're going to get that thing filled today. All right. So I'm just going to post this for everybody. Keep an eye on this one. So I'm doing 2 broken wing butterflies. This is coming in the Zoom chat, so everybody can have this one. SPX 1215 expiration. So I'm buying the 6895 call, selling the 6900 call, then skipping a strike to the 10. Looking for $1 credit on that one. That's a pending order. And then same thing at 68. I'm going to go 6805, 6800, 6790, $1 credit. Okay. Those are the 2 trades I put in this morning. Now, those are pending. Now the question is, can I get some either right around the open for a profit trap, maybe a gap fill, and then maybe up here towards the 6,900. And these are all maybes. Like, I don't know if price is going to do anything today. So I feel like if I'm going to put some profit traps in, I've got to have some like reward to risk that's favorable, right? And I've got to cast a wide enough net that, I don't want to see price break below 6,800. So this is where it's like last week Friday, like I overtraded for sure. I mean, I had 5 butterfly traps. I landed one, but actually it would have been a positive day had daily profit play had a break even trade or better. If we won on daily profit play last week Friday, I would have made a few $100. But profit trap offset that, and then took a few $100 on the other traps that did win. But no big deal. So I'm just going to try to figure out, could we get something around this like 45 handle? See how wide I can go without it costing me an arm and a leg. Okay. As far as our, highs and lows, VIX had a spike this morning around 68.27. If I'm not mistaken, with a major OPEX cycle on Friday. So Friday's expiration is a major one. I think it's like quadruple witching. We have a VIX expiration plus futures, plus indexes, plus stocks all expiring on Friday. That could spur some movement going into this week. Right now, the market's just kind of stuck between 6,900 top, 6,800 support. So pretty good range. Like I said, as long as the range isn't broken, like especially to the downside. If we don't break the range to the downside, the market might do what it can to try to get to all-time highs and finish the year at a positive, all-time high. No. Both trades are calls. No. Do you see them in the chat? These are all calls. These are all puts. So I'm essentially, looking at a top trade with calls and the bottom trade with puts. But it's a broken wing butterfly setup. So I'm calling the top where I don't want price to go above 6,900, and technically my break even would be like 6,906, and then the bottom my break even would be 6,794. Those are my break evens. So that is one thing I like about having profit traps is we can have a break even that's slightly better than just the pin price. Give ourselves a little bit more breathing room. Okay. All right. Go here. If I go put side, interesting. Okay. Just trying to think. Gap fill at 28. I'm going to throw a couple weekly butterflies out there. These are bonus trades if you want to take them with me. I'm going to go another kind of 6,800 pin. I'll go 68 here. I'm going to go out to the 22nd. I'll throw these in my Telegram for anybody that wants them. I'm going to go put 68, 67.95, 67.85 and see if this will fill for $2. So that'd be risking 3 to make 2, but I also have a profit trap of $500. So I'll let that one marinate for the week. And then 67.70 was the NVIDIA candle. So I'm going to start 70, 65, and 55. Same thing there. See if that will get filled for $2. All right. So I'm going to throw this one in Telegram. A couple of bonus trades. I didn't enter one Graciela. Not officially. The trade I looked at this morning for daily profit play was only showing like 50, 55 cents. So the trade I posted in the chat can serve as daily profit play this morning. Otherwise, we got to go way closer to price because of the lower expected move. So what I'm going to look at now is, could I consider a profit trap in this area here? Maybe a profit trap in here. It's going to be hard to get them nailed down exactly, but maybe 3 profit traps that I can land one for the day. So, I mean, if I were to pick a level, it's like, okay, we have the 68.45. That's a pretty key spot. 60, maybe 68.90. 68.90. Maybe the 68.90 or a 6,900 area would be another spot. And then a gap fill around like 68.20. So if that was like 6,800, 6,800, 68.20 trap, 68.45, 55 trap. I'm just calling out like where I'd actually put my pin prices. Okay. So if I was willing to risk maybe $300, $400, each trade offers maybe $1,000 opportunity. or maybe like 800 or 900 bucks of opportunity. So it's enough to like cover the risk if you get a profit trap. Um, I just think price could be a little chill today. All right. So download that guy. Bonus trades. SPX 1222 expiration. I'm posting this for my public Telegram. I'm buying the 6775. Is that what it is? 6770. The other one is another bottom that was 6800. So buying the 6800 put, selling the 6795 put, then skipping a strike to 85 put, $2 credit. SPX is in a noticeable range. 6900 resistance, 6770, and 6800 support. It's the final full week of trading for 25. Hold and offer a rally into end of year. So that being said, I'm curious. Maybe I could change the expirations. Instead of going 1222, I could go like literally end of year. See if we can hang into the end of the year to the 31st. That way I'm not just like, oh, week to week. I haven't posted it yet. So either the 22nd, I might take the same trade. Same trade into the end of the year. So I'm gonna do this. I'm gonna go 1222 expiration and all right, so I'll just post that one first. And let me see if I can do a 1231 expiration with the same levels. So 68. So I'll buy the 68. Get rid of these doodles. Buy the 68, 69. So skip there. Okay, try to get that filled for $2. And then 6770. For $2. All right. I'm going to add with a 1231 expiration. So SPX 1231 expiration. Buy the 6800 put. Sell the 6795 put. Buy the 6785 put. $2 credit. And then 6770. Okay. So 4 potential trades, just letting them hang out. Do you need a manager close? They don't have, I mean, you don't have to worry about them until they fill. Once they fill, then your line in the sand. If this is, I'll just go through these. So right now, let's say that this one gets filled for $2. If this fills for $2, your break-even price is $67.59. Actually, $67.58. So as long as price is above $67.58, your break-even or better. $67.59, you make $100. $67.60, you make $200. Okay, $67.65, you make $700. So once they're filled, then we'll talk management. Go till canceled. I'm going to let these trades run until they're if they don't fill, then they will just the broker will not fill them and they'll just remove them on the 22nd or remove them on the 31st. But I'll let these fill. Okay. If they don't fill, no big deal. If they don't fill, that means the price did not test these levels. Okay. So if we're looking at the S&P, and let's say the S&P is, not going to retest 68, not going to retest this NVIDIA sell-off candle. If it doesn't retest this area at all, then the trade is not going to fill. So, and it's not a bad thing. Look, if the market just keeps doing this, okay, or the market is kind of floundering where it's like it just doesn't test the lows, doesn't test 68, doesn't test 67, 70, okay, and it just goes higher, then those trades don't fill, and maybe we see some direction at the end of the year. There's your Santa rally. Santa rally technically is Christmas Eve through New Year's Day, right? But everyone thinks that the holidays are like Santa rally. We're near all-time highs. Okay, I'll leave them open. I'll leave them open until they get filled. If they don't get filled, then no worries. But again, don't take the trade unless you know what you're doing, right? Like I want you to know that if price is going to hold support, I want to be in that trade. So where's my risk? Well, if we fall, we don't come back, then I risk. So I'm risking $3. Okay. I'm risking $3 in each trade. So I'm risking $600 to make 4. All right. Or with a profit trap, I can make up to $700. So even if I get one profit trap, I pay for both these trades. If I get one filled and the other one not filled, I still make $200. So I'm okay with that. It's in my public Telegram, which is right here. Oops. Is that right? That was weird. Chris Pulver. There it is. Okay. All right. Daily profit play today. I don't think I'm going to get filled on daily profit play. I talked about it first thing. If I look at my deltas, so I can go, now the 9 delta, now the 11 delta. It's trading for about 75 cents. I don't think we're going to get filled. And I'll say this, man. If we do get filled, if I go like 9 delta today and I get filled for $1, and this gamma at like 68 or 6,900 is hit, look, I don't think we should be trading daily profit play if this market is giving us a plus minus 30 and this market's moving 50 points a day. Think about that. It's like the whole point of daily profit play is to see an expected move within the range. And if we're just getting like this loosey goosey, like ups and downs, it's like stop trying to range trade, So, even going last week, it's like we didn't do anything wrong. We did a 10 delta. That's super well contained. And price came to us and we got filled. But if price is not going to stay within expected moves, it's like this is not the time to force trades on daily profit play. We experienced this last holidays too. It's like when the markets aren't containing themselves, when they're not, and this is just a lack of volume and less liquidity during the holidays. So I'm just saying, like, be careful. It's okay. So for Telegram for Daily Profit Play members, I didn't post a trade. I shared the butterfly spread this morning that I'm putting at 6,900 on the call side and 6,800 on the put side. And if those get filled, that's going to serve as my trade for today. So if one of these fills, what am I using? I'm using my big gamma levels. There's a 69 gamma, there's a 68 gamma. So if we can bounce off those levels, sure, fill me for $1. I'll risk 4 to make 1 plus have a profit trap. If one of these fills, awesome. That'll be my trade. Okay. So if you want that in Daily Profit Play, then I will give it to you in Telegram. But I'm not doing a standard Daily Profit Play today. There. So pending orders. Okay. So if you're in my Telegram, you got bonus trades. So the 12/22 expiration is next Monday. The 12/31 expiration is the end of the year. All I need price to do is see if we stay above support levels. Okay. This would be a fairly low risk, like favorable reward. So yes, I'm risking 3 to make 2, but I also have a profit trap in there that gives me up to $700. Okay. At a support level, which part of me thinks like if we would test support, we get filled on these trades and hopefully race to the upside. And, these are just nice winners. So today's daily profit play, I am, improvising just because the standard daily profit play was only allowing us to go like maybe 40, 45 points up or down. And it was offering like 60 cents. It's going to be hard for 60 cents to rip up to $1 credit without having a lot of direction. And you're just going to have like terrible deltas. So I'm going to use my gamma levels and say that this would be my support today. This would be my resistance today, and see if price will stay inside of that range. Okay. So loss probability, you go right back to your deltas. I would have about a 3% chance of loss on the call side, and I would have potentially about a 15% chance of loss on the put side. And that's like a spot check right now at current prices. That's based on right now's delta. So my 6,800. So this trade, where's my working order for today? This trade for today is the 6,800 pin. So right now it's trading at a 17 delta. So out of the money, this is about an 83% chance of staying out of the money. But we needed to fill first. Like right now, that trade's trading for about 50 cents. So if price gets a little bit more directional to the downside, this one might get filled for $1. Okay. All right. Look, I'm getting a lot of questions. That's fine. But this is why I keep emphasizing, the time that I keep saying practical options, foundation, prerequisite education. Get yourself some options education, which I have. A $27 course to get you started. A masterclass that I teach in all of my classes on all these different strategies. What I'm saying is you should not be placing trades unless you know where price has to be for you to make money. Okay. So the trade that I placed this morning, if my pin price is at 6,800, I don't want price to fall below 67.94. That is going to be my break even. On the upside at 6,900, I do not want price to rally more than 69.06. The reason why is because I have a broken wing butterfly like that. And on the put side, I have a broken wing butterfly like this. So I have my $1 credit that hopefully will fill. I have a $5 profit trap. So if I take the $1 credit plus my profit trap, that's why I have a break even at 69.06. And the downside would be This would be my dollar credit, like so. Here's my $5 profit trap, and the break-even price is 69 or 67.94. Right? So why is this important? Because as long as we stay above 6,800, this trade can still make a buck. If we stay below 6,900, we can still make a buck. Price is moving a little bit. Like we might get filled. We might get filled on this trade. That's fine. Okay. Why would I take this trade? Well, we opened up at 60 with a plus minus 36. That was pre-market tasty, right? 60 plus 36 gets me up to 68.96. 60 minus 36 would be 68, 24? So we should not see prices going higher or lower than this area. And my strike is 6,800, okay, which should be safe. Probability wise should be safe. And 6,900 should be safe. If they are not, there's risk in the trade. What is my risk for today? If this gets filled for $1, then my risk is going to be 4. If I get filled for $1 up here, my risk is going to be 4. All right. Like it's just crafting a trade. What am I doing with this? Well, I am expressing that I don't want price to go too low or too high. And I'm trying to establish some type of floor that I can benefit from and ceiling that I can benefit from and see price stay within that range. Okay. So the first step for today is, will this trade get filled? These are both pending orders for today. Neither one's filled. Like the put side is trading for like 35 cents, 50 cents. Okay. If I want to take a lesser credit, if I want to take, 40, 50 cents credit, well, I'm risking 450 to make 50. I'd rather let it sit and marinate for $1. That's the same risk profile that I take in a typical daily profit play, but this one gives me a profit trap. Because when I started looking at live prices this morning, we have a 6,800 gamma and we had a 6,900 gamma that is now starting to disappear. So does this mean that it's going to go to 68 and stay there? Not necessarily. We could fill the gap, work our way back up, get into positive gamma, and then float here for the day and be in Nowheresville. And that's okay too. I'm just trying to get a trade filled on a probability. I don't want prices to fall down here. Right? I don't. If that happens, that it's outside the expected move. I don't love that at all. But we might find ourselves getting a trade filled this morning and maybe have that gamma offer some support. So it's getting closer. I mean, I'm seeing 60, 75 cents. Like we might get this thing filled for $1. And this is what I'll ask you. If this gets filled for $1, do you know where price is going to be? Watch, I'll build the trade out for this morning. So it's a 68 pin and a 69 pin. I'll build this out in option strat to show you what it looks like. So we'll go put butterfly since this is the one that's the closest. I'm looking at pinning the 68. So did I buy? Yeah, the 05. Okay. So I'm buying the 05. So I'm buying the 68.05, pinning the 68, and then skipping a strike to the 67.90. That's what my broken would look like this morning. Okay. Now, if I add to that on the call side, I add a call, add a call, add a call, and then my sell call has to be 2 strikes. And I'm going to do this one at 69. So I buy the 60, was it 8? 60, 68.95. So 68.95. 6,900 is my pin. And then 10 for the skip. There. That's my trade. If this gets filled this morning, this is what the trade looks like. So this would be $1 credit or $1 credit. Right now, neither trade has been filled. So this is not applicable yet. Okay. But if one of these gets filled, my risk is if price goes beyond 68.05, I take on risk. If it goes, actually, it'd be beyond 6,800 and 6,900. Now, my break even on this trade is because of this profit trap. Because of this profit trap, my break even is 69.06. My break even here is 67.94. How do I get that break even? We have a $5 profit trap plus a $1 credit fill. Okay. So if this fills, my risk is going to be 6,800 and 67.90 is a 10 wide spread. Okay. So $10 is my maximum risk, but $10 minus a $5 profit trap and minus a $1 credit, 10 is reduced now to 4. That's my maximum risk. So if the market drops 10% today, I'll lose $4. Should that happen? No, it shouldn't. But if it does, we'll keep an eye on it. To the upside, if I have a $10 wide spread, that's the 69 by 69.10, take away my $5 profit trap and take away my $1 credit, the risk is 4. Okay. I don't want price to close lower than this. I don't want price to close higher than this. I want price to still be a range trade. So I'm trying to take a trade that I think is fair. If we get one of these sides filled, great. Okay. It's stuff like this where it's like, I want you to be able to do this. I want you to know, like, when you put in these contracts and putting these strike prices and putting these expirations, roughly what this trade has to do for you to make money. That's the beautiful thing about trading options is you should know what's your reward risk, especially trading defined risk. You should know what this trade is going to look like. Okay. So right now, came down to 20. Yeah, I'm just not. It's like I could settle for a little bit more risk, but it's going to let it hang out for $1. Now price is going right back to the center. So down for the morning. We're in negative gamma right now. I mean, below 68.45 is negative gamma. So the day is not done yet. But I'm curious if we kind of land around the sticky zone around 68.45, just have kind of a big nothing burger. So the market opened here at set 60 and it fell to 23. Okay, so it's about 37 points. Now, again, this is way too early to guess like, oh, that was the plus minus 36 on Tasty's platform. Maybe it was. Right? What's our plus minus on the day now? Still another 26 points. And that's from current price. So every time you're watching this plus or minus move, like right here, this is from current price. That's how dynamic like the markets are. Every single day, every single expiration, the market could go 26 points lower, 26 points higher from this price. Right? So what did we look at this morning? We looked at the, kind of pre-market plus minus based on the open. Am I still in SLV? Yeah. Yep. I'll take as much SLV as the market wants to give me. DB, I'm seeing your question there. At the end of your buy sell is a 1-2. Yeah, that's the number of contracts. In order to create a broken wing butterfly, that's the number of contracts. So this is a 67.70 put with 1 contract. This is a 67.65 put with 2 contracts. and this 67.55 put with one contract. That's what's going to create that broken wing butterfly structure. Okay. And then Stephanie, how much do you decide to sell for? Just knowing the risk. So if I get the trade, so these bonus trades, if I get these filled for 2, I get filled for 2 to risk 3. Okay, again, I do the math very similar how I just did it. 67, 65, and 55, that's a 10 wide, right? So that's $10 wide, but I have a $5 profit trap and a $2 credit. So 10 minus 5 minus 2, 10 minus 5 minus 2. That put me down to $3 max risk. So this has $3 max risk. 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 So we'll see what happens. Okay, for today's trades, let's see if we can pull in. I mean, since we're closer on the put side, if price falls a little bit lower towards that 6,800 handle, it would be nice to see, okay, we opened up at 60. So we opened up around 68.60. If we fall down to 6,800, I would hope that we finish greater than 68.35 today. Just because of that market maker move. Well, I guess greater than 68.25. Okay, I had a plus minus 36 in the morning. We saw Thinkorswim had like a plus or minus 30. So from this open, I mean, we should see prices somewhere within about a 30-point range. Question is will that happen? And I'll say this again. If today is not within the expected move, that is 4 days in a row. Clearly, that is a red flag. Like, hey, man, market makers are not doing their job. We need to be careful on how we're trading day to day going into this final week of trading. It is probably not worth it to throw in range-based trades like daily profit play where the markets are not respecting range levels. Type in clear in the chat if that is crystal clear. It is better to not trade. If you want to go daily profit play, it is better to not trade if the market is no interest in staying inside of a range. So today is my, I'm drawing the line today. If we do not have the markets finish within an expected move today, I think we are wasting trades by guessing at daily profit play when we've had 4 days in a row where clearly the market's not interested in staying inside of expected move. Okay. So for the 200 plus people that are in today's session, for the 1,000 people that are in my daily profit play, it is not worth the risk when market makers and expected moves are not respected every day. Like, I give it 1 to 2 times. Today would be 4. So I'm being flexible. I'm being lenient because we still have a bunch of winners. Even through the other days, we still won. Like Friday I washed the trade fine, but I still ended up losing because I placed some over trades. That's on me. But if we go 4 days in a row, it's like, okay, clearly this market's got other plans of just like letting prices flow around, less volume, less liquidity. It's not worth it. It's not worth it. So today's my line in the sand day. So if we are not within a close, okay, if we're not within 36 points of this open, then I will be placing daily profit play trades based on highs and lows and butterflies only, because it's not worth the unknown flow of the day. It's like, yeah, I mean, if prices, what's the VIX at right now, by the way? VIX has jumped up to 16.8. Okay. Well, since we haven't been filled, by the way, let me do this. I'm going to bear with me. I know we're moving fast here. On the put side and the call side, let me see. I have to respect the VIX a little bit. So let me go. I'm going to cancel the 12:15 expiration. I'm going to cancel the put side really quickly. So cancel the put side. And then for the call side, that can stay. That can stay because we've already dropped, 37 points. I think for us to rally up 70, 80 points, the call side's fine. So what I'm going to do now is the put side. I just removed that trade. So this one for daily profit play, I'm going to do a DPP update. So DPP update, canceling. And again, I know this is a fast pace, but this is zero DT trading, and this is like live session stuff. This is live trading stuff. So you got to move kind of quickly here with me. Nothing got filled. It's okay. Just cancel that put side trade. Canceling the put. So broken wing, put fly, and we'll reissue new strikes. VIX is jumping up this morning. Okay. So cancel that side. So I'm going to edit this one. Put side is now canceled. So pending on the call side, canceled on the put side. Let's see, because the VIX is going up. Let's look at the numbers. If we had like a 17 VIX, or we go right back up here towards like 17.86, this is last week's VIX high. Okay. Hard part is we had a gap. Let's take this. Let's go 17 VIX. That should be like a 1.06, I think. 17, 1.06. Take that from your close, 1.06. I mean, that's a big difference. And that probability of getting filled is really, really low. 100% ATR is at 6760. Based on the VIX, just over 1%. Gosh, I mean, I don't think that trade's going to fill. If anything, here's what I'll do. I don't mind the trade at 6,800. Okay. I don't mind the trade, but I maybe don't want the dollar. Like, let's get $2. Let's get 250. Let's make it like a 1-to-1 if this market's going to get a little nasty at 6,800. So I'll give it a little bit more buffer. Let's go here. So I'm going to go 95, 90, 80. 95, 90, 80. And see if this one will fill. I'd be happy with the $1.50. I'm going to put a trade in for $2. I don't think that's going to fill. Unless we fall to 6,800, this one might have a chance to fill. So this is my modification. If we drop another 15 or 20 points, this one has a chance to get filled. So I'm going to put it in for $2. And the reality is, if I watch this one this morning, if it's trading for like $1.50, $1.30, $1.60, I might just take the lesser credit. $2 is kind of a lot to ask for, because you'd have to be, in the money by probably 10 to 15 points for that to fill. Okay. All right. So I'm going to adding a different broken wing put fly. So today's trade is the 15th. I'm buying the 6795. 6795 put, selling the 6790, buying the 6780, looking for $2. I will accept a dollar credit or more, as long as the VIX isn't screaming higher. Today's low, based on a 17 VIX, that would be approximately so VIX is 1686. We're looking at a low today around like 67.55. That's if it goes like full VIX levels. So 67.55. Last Friday, the VIX spiked up to 17.86. So I'll be monitoring. Okay. So new put fly in just below that 68 handle, trying to get a bigger fill than just $1. Okay. What about reverse? I mean, if I really thought we're going to be super directional, take Greg, I would have already done it. I mean, if you want to do reverse based on right now, let's see here, 10 by 15, 30 by 25. I mean, you can get 590 for that with about a 20-point dead zone. I mean, it's not terrible. You're pulling in 90 cents. Your risk is 410 to make 90. You just need price to go some direction, but we've already had a decent chunk of direction for the morning. So, I mean, if this is over $6, then that's a maybe. But 575, 580, it's like, I don't know. Okay, so we'll see what we get. So I'm going to keep an eye on that put fly today in case if this is trading for over $1, I'm tempted to take it for a little bit less credit. But when I say like $1, it's like give me $1.25, give me $1.50. Let me justify like okay, I'll risk 350 to make 150. I'll risk 3 to make 2 if that's what it's going to give me. Is there any is there any bounce in here today? Is this market has dropped straight down to 68 and then stay there, or does it get to 68 and then bounce? I don't know. We'll find out. But if it drops to 68, I mean, that's clearly the biggest gamble level this morning that's filling up in real time. So do we hit 68 and then bounce back up? Well, if price closes above 68.30, market makers still do the job today. Okay. All right. So this is all the fun stuff we unpack every single day, right? Daily profit play every single day. This is what we do. I am making an executive decision, like based on the price action we've seen last week. We had 3 days in a row, this being day 4. I still think that prices will be within the expected move today. Obviously, and we'll talk about that tomorrow, because if it is, then okay, we can go back and kind of assess the trades this week, and I'm still going to be picky. By the way, the original trade I was talking about this morning, I don't know if it would have filled it. I don't think it would have filled. It was traded for like 55, 60 cents. Even the move that we just saw with the price dropping about 30 points, it might have filled. But that delta, I needed like the strikes to be like 6,800. So I mean, let me see this, I guess. If I go 75, and now the call side is like all jacked up. So the put side, if I go out of the money with a 15 delta, that's a 40 cent. It's like I'm not going to get $1 today. Let's see. It's 50 cents on the put side. 68.90. 85. I mean, even trying to play with the numbers on a daily profit play, it's like I'm just not getting the credits that I want. Like this would be okay. We had a high of the day at 60, and I could go up to 70, which means we'd have to take out today's high. So I mean, but I'm only getting 80 cents. I want $1. So it's like I really have to get close to the expected move in order for me to get the trade that I want. I just think there's too much kind of flow and direction. So I don't think it's worth the risk right now. Not today. Just let price do its thing. I'm trying to, give us a decent level of support. And I still think this market could do this too. If we hit this level, okay, either we hold the 6,800 support or we get down to this NVIDIA candle. Everyone gets worried. When the market's down here, everyone's worried like, oh no, this is the end of it's like all it is support. If we find support, we bounce back up. Cool. What I don't think is very nice of the market to do today is gap 0.5% higher and then fade that entire gap. That doesn't feel very good. Give the market like, oh, futures looks pretty promising this morning. Everything's up and then splat to the downside. So if this is the market's way of that, kind of rotation, then, is what it is. By the way, if we do drop today to 67.75, it's like that is a drop of over 1%. That'd be 1.25%, which would be a nasty 2-day sell-off from last week, Friday, and today. So my hope is that it's not too drastic, it's not too extreme, and we have some gamma that actually holds the support. Do we hold 6,800? Do we hold the 50% ATR? Then we should be okay. So we'll find out. Yep. So gap fill. Yeah, and that's the spot that I'm looking at. So this gap fill here, I can see the market going after it. Does it happen all today? Like I don't know. But I can see the market finding that, right? And using that as a support level. So it wouldn't surprise me. 67.70 to 67.90, 67.70, 67.90, that area I could see price coming to check. So if you want to be extra safe today, go even lower on your puts, right? If you want to go lower on your puts, then move your strikes down to like a 67.80 or 75. If we're going to fill this gap today, stay out of the way. I don't mind doing that. Right? I mean, it's better safe than sorry. If this market's going to try to find that gap, it's like, why put it in harm's way? So to be safe, I'm not filled yet. Let me lower these strikes a little bit. So I'm going to cancel. I'm going to go down to that 75 zone. So I'm going to go, let's see if we can get this a little bit larger. Let's go 85, 75, 55. There. It's probably not going to fill the way I want. So I'm going to go 80, 75, 65. Could I get $1? That puts the break even at 67.70. Give me $1 on this trade. I'm going to take it. Give me $1. Give me $1. Okay. And then in Telegram, I'm making the adjustments. Adjusting today's broken wing put fly. 12, 15 expiration by the 67.80, 67.75, and 67.65. $1 credit. Okay. It's going to be close. It's trading for like 70 cents right now. Maybe a spike down to that 68. Slightly lower. We might get lucky to get that thing poked for a fill. Okay. That also means we're getting closer on the trades out to next Monday, by the way. This one is trading for $1.80. I'm asking for $2. So we actually might get filled on those bonus trades that I put in for the 22nd and for the 31st. Those are getting closer. Yep. And the VIX is not stopping. Yeah. So VIX is up over 17. I think we should calculate the bottom today based on this like 17.86. I know that is 1.11. I know that because it didn't respect the VIX last week. We were 1.3% lower from the slide, and it should have like kind of maxed out at 1.11. Now it didn't close below the 1.3, but I was still annoyed that the VIX didn't contain that move. So high to low. So if we go 1.11, we're gonna like a 68.50. And that, again, that's an if. Like we have to do some pretty severe like technical damage. And it's like even if we hit the 1.11% today, we probably still bounce. I mean, this VIX box is here for a reason. Like we probably still have some type of technical support, either coming now at 68 or coming to those gaps that I talked about, 67.70, 67.90. Yep. So we'll see what happens. All right. So let's do this. Let me get through a little daily profit play this week. So our final week of trading, final week of like full week of trading, no holiday disruptions. The schedule. Let's look at the calendar. So December 2025 calendar. Okay. So Christmas Eve, Christmas Day, New Year's Eve, New Year's Day. Is that right? Wednesday, Thursday. Yeah. Okay. So this schedule, we will be live this week. I'm going to be live Monday, Tuesday, Wednesday, Thursday. I am traveling early Friday. I think our flight's at like 6:30 a.m. So Friday is no live sessions from me. Next week, Monday, Tuesday, live business as usual. Obviously, like be bracing and just in your mind prepare for holiday trading, which is a bit of a wild card. I mean, it should be drifting sideways. If it's up, great. Obviously, that's why it's going to be important that this week, this is a major options expiration for Friday. We have a VIX expiration this week, and we have our indexes, futures, and equities all are expiring on Friday. So major options expiration. That is going to, I don't know. I mean, either we have some pin levels that's going to, dump all of the forced hedging that if it pays enough, great. If it doesn't pay enough, then everyone gets kind of burnt during these like all the hedgers typically get burnt. But that also leaves us vulnerable. And I say this after these major options expirations, it leaves everybody kind of vulnerable the first couple weeks, which going into a holiday week plus having a fresh cycle for like another monthly from December 19th to whatever January is. I think it's the 16th. The big one is January 16th. So over the holidays, it does leave the market a little vulnerable, a little bit vulnerable. So anyway, schedule wise, we will be live this week, Monday through Thursday. So I won't be live the 19th. We'll come back. We'll be trading the 22nd, 3rd. Markets are going to be limited hours. Brokers even might be closed like by noon or 1 o'clock on Christmas Eve. No trading Christmas Day. Back at it the 26th. So, there's another block. And then the week for New Year's, there's another block. Probably limited hours again on New Year's Eve, New Year's Day. Markets are closed. Okay. So kind of full trading, in my opinion, is going to return on the 3rd, 4th. So 5th or the 12th. The 5th or the 12th is when we're like back to business as usual, meaning like markets are back in swing. Everyone's back to their desk. Holiday trading is done and over with. Okay. Just give you a heads up on that. All right. Let me check the prices really quickly. So that 80, 75, 65 broken wing is trading for about 40 cents, 50 cents. We just poked that gamma. That low is 68.01. Is that it? Like if that's our low for the day, it's like, well, that's frustrating because I missed my fill. Let me see. All right. We're not done improvising. All right. Let me see something here. So just based on this like kind of unfolding of price this morning, I think having like if it's inexpensive enough, a profit trap around 6,800, and then coming back into this pocket here, if it's cheap enough to get a couple of profit traps. So like the 30 and 40 zone. Let me see what is the call side is always a little bit more expensive, which is annoying. So 30 to 45. I mean, it'd be a little bit cheaper to get back to like 40, 45. Let me see something here. So 40, 45. It costs a buck 20, buck 30. Go a little bit wider. So that's 20 wide for 3. It's like that's a decent trap. It's just now we're talking like how much do I want to risk on each trade? Where's my butterfly trap? This pays about 3.5 to 1. 1150 minus 350, or I'm sorry, 1150. I mean 3 to 1. It's okay. If I line up a bunch of these, it's like, well, I'm just gonna break even then for the day. So I don't know. That's still a bit too wild on the risk side for right now. If we wanted to get a little gutsy, could we call the bottom? Just again, I'm just spitballing ideas here. Could I call the bottom here? 68, 67, skip a strike. What's this pay? I mean, 70 cents, 65. It's like that's a broken wing. You're still risking 430 to make 70. It's okay. It's not great. The low of the day is 68.01. So are we done? Are we not going to come back to that? Could we profit trap 6,800 and see? You get 70 to 75 cents. You get a $5 profit trap if the low is in place. So I don't know. How many of you feel like we can call the bottom right now? How many of you feel comfortable that 68.01 is going to be the bottom today? I mean, if there wasn't a 67.90 and a 67.70 that I think are gaps the market can go after, I don't think that's the trade to call. So I'm just not there yet. Trade that I put on, I think is fine. I adjusted the put side. The VIX has been screaming this morning. So, VIX is highs around 1736. Okay, so let's put that into our VIX, 1736. So we got about a 1.08% move. I'm going to go 1.08, not based on the high today, but based on the close from last week, Friday. 1.08. So about 67.55. This is 52. So if we're going to pin something, like pin the 50. Okay. So I'm going to go pin the 50, 55, 55, 50, 40. Can I pin this at a buck? This one I'm okay with. So I'm going to keep 2 pending orders in. I don't know. It's a lot of, this is what zero D can do is like you're trying to, improvise based on the current flow. We've got high VIX, we've got gamma levels changing. It's okay. Just make sure, like, well, what am I risking here? I'm going to try to risk 4 to make 1 plus a profit trap. Which, if I'm lucky, based on the VIX calculation, we should not see that trade threatened, or close below, hopefully. So adding another defense trade or low price trade based on current VIX high. So SPX 1215 by the 6755. Sell the 6750 by the 6740. $1 credit pending. So for today, I've had 0 trades fill, and that's okay. I want price to come to me. I want the fills. I want the levels. And, I nobody likes to be in a trade that you're not enjoying being in. I can say that from plenty of experience. If you've ever been in a trade that you don't like being in, it doesn't feel good. So that's why I'm okay canceling and replacing and just modifying our levels. Now the trades I'm looking to get filled are somewhere in here. These are all working orders. The expected move is still right here. And if price is going to fall back to like 6,800 or maybe a little bit lower, these still have a chance to get filled. Okay. My hope is that we get filled and we fricking bounce. So what would be, in a way, would be kind of nice would be if the market can come back down to retest 68. Okay. And then maybe work its way back up and we get filled on, one of those broke wings for this morning. If we don't get filled, it's okay. Right. So I'm gonna put a pin in that for the day. We'll check this. I'm gonna go through a little prezo with you for daily profit play. Questions. So this week, Monday through Thursday, how many of you would like to have a masterclass with me this week? Masterclass